Good morning. Market Day Report is on the air. I'm Tony. Thanks for allowing me to be a part of your morning as we got a look at how the markets might start trading today. And we'll use this first segment, the grains and the row crops side, to look at how the markets traded in the overnight session. Let's start with the corn market. Good place to go. Lower across the board in the trade overnight. New crop December at 447, down a penny and a quarter. Now, during the day sessions this week, corn has settled higher 3 consecutive sessions. Over to the soybean trade. Guess what? Soybeans have settled higher 3 consecutive sessions. In the overnight action, though, 1030 on the new crop, down 3 1/4. Let's hit wheat. Wheat yesterday was higher in the Chicago and Kansas City exchanges, but lower for Minneapolis. Overnight, 547 for wheat. That's a penny and a half higher. Hard red settled overnight, 542 3/4, 1 tick higher. And then spring wheat, the December, 2 ticks higher, 653 1/2. Cotton market yesterday breaking a 2-day losing streak. Overnight, 68.08, up 10. Well, to help us break it down, President, Midwest Market Solutions, Brian Hoops. All right, Brian, first, good morning. And what are you watching?
Hey, good morning, Tony. Well, no private export sale announcements this morning. In fact, we've gone the entire week without any export business. Our seasonal slowdown for corn and soybean sales is upon us, unfortunately. South American supplies are hitting the market, overtaking us, especially Argentina, which is about 91% harvested with their soybeans. Now, their corn harvest is a little bit slower, about 43 to 45% done. That's just a little bit behind average. The safrinha corn crop is just starting to be harvested, and it looks like it will be a large crop, and that's why we've seen old crop corn futures really taken on the chin in here. Basis levels in South America have fallen about 40% over the last 30 days. Basis in the United States is not any better, and in a lot of areas it's gotten very poor here recently. It's a sign that there's probably just too much supply, despite the fact we've had strong ethanol demand, good feed usage, and decent exports so far this year. The market's anticipating anyway that our summer exports are going to be very slow. Weather-wise, it looks pretty decent. The latest weather models from NOAA came out last night, 6-10 day and 8-14 day. They're talking about above normal temperatures, above normal precip, which if we can get some sunshine and warmer temperatures, that looks to be nearly ideal for the corn crop and for soybeans as well. So it's, I think we saw a rally this week because came into Monday in an oversold situation. We found some technical support and bounced off of it. It's probably going to be a struggle now as we get corn close to this 450 area that we touched in the overnight. To trade that high or even higher is going to be a real struggle, I'm afraid. I think there's going to be a fair amount of selling pressure starting to creep into the market because we planted a lot more corn acres than we did last year. And if we have a crop that's similar in size to a year ago, it's going to put some pressure against our prices, especially when you have a safrinha crop that's going to be probably much larger than expected.
Hey, Brian, let's take a break. When we come back, I want to talk about a market that's hit life of contract highs. Tell you what, the livestock markets are on fire. We'll talk about those next. Market Day Report continues in a moment. Well, when it comes to cash cattle, I might be able to remember our number for the North. That was 240, or for our number for dressed at 380. But I had to write down the cash cattle trade in the South. It started at 225. Then it went 228 to 230. And it looks like it finished up at 232. So I had to write all that down just to keep up with what's happened with cash cattle this week. Now look how that spilled over to live cattle futures. Higher yesterday, up 460, $223 on the June, $216.90 on the August. That's up 455. All contracts in higher territory. Now, the feeders were up as well, 555 higher on the August at 309.42, settled just a nickel off the day's high. September 308.50, up 535, And the hog trade yesterday was mixed. June higher, lower for July, August, and October. That August contract finally breaking a 4-day win streak, 106.80 off 70. Let's talk more about this. Brian Hoops, Midwest Market Solutions. This is historic place for the market.
Right. We've hit all-time highs in live and feeder cattle yesterday, big moves higher, and we may not be quite done yet. The cash trade is coming in sharply higher this week compared to a week ago. We're at least $5 to $8 higher on a live basis in the Southern Plains. Dress trade $10+ higher. And you look at where June futures, even after $4.50 rally yesterday around 223, we're still heavily discount to where cash traded this week in the Southern Plains. I don't think we're rebuilding this inventory anytime soon. Looking at this month's cattle on feed report, placements expected to be down once again 4 to 5% from a year ago. On feed supplies, couple percent less than a year ago. These numbers are tight and are going to stay tight. Really, the only caveat or concerns you have is demand. Can the consumer continue to buy beef at these higher price levels? Well, pork prices have come up quite a bit, so they're not as cheap as what the beef is or was previously, and certainly not as expensive as the beef. But it's still at a price level here where we're going into the summer grilling season. I think there's a lot of people that still want to put a steak on the grill. And at some point, yes, we'll probably turn that demand and soften it up, but it hasn't really shown any evidence so far that that is happening.
Okay, and I guess finally here, we're trading under new limits here as well, expanded limits that are new for the month of June. These are not temporary because of what we saw yesterday, are they?
No, this isn't anything to do with yesterday's trade. This is in place. They had anticipated this several months ago that they were going to expand limits. I think it's 725 and for live cattle and 925 or 975 for feeders. It's a high number. It's good to have these expanded limits. You just never want to trade lock limit, I don't think. Once you do that, then pressure really starts to build up. We don't have a night session for the cattle, so we need these cattle to trade freely all day long and not be confined to any trading limits. That way people can get in, get out of those markets and those positions as they need to. So it's good to have these expanded limits. And I don't know that we're going to test them, but I think we're still going to see more strength in this cattle market other than some profit-taking reports from time to time.
All right, Brian finds you a steak for the weekend, and we'll see you next week. Brian
All right.
Hoops, Midwest Market Solutions.